Generally speaking, there are three main ways to start accepting credit cards at your business. You can go to your bank, to an independent sales organization, or to a payment service provider like Square. The bank seems like a natural spot since they're your bank and you may have an existing relationship with them. But the reality is, banks usually hand you over to a partner company you don't know and don't have a history with. The bank application is long and complicated, and you'll need to share your credit history, bank statements, employment history, and more. It can take forever. If you do get approved, they'll provide you with a few packaged options for hardware and software. Again, these packages are from third parties, and they tend to have expensive rental terms. They also tend to be complicated to use, hard to integrate and maintain, so you could be stuck paying quite a bit for registers that are big, clunky, and can take hours to train employees on. Banks' credit card processing setups also don't cover you for PCI compliance, which you have to handle each year to avoid fines and fees. PCI compliance is a checklist of items you need to do in order to avoid being on the hook for fraud. And if the rules for PCI compliance change, which they do every year, it's more time and more money for you to update your system all over again. So if that all sounds bad, and you don't go with your bank, you may find yourself on the radar of an ISO. They may reach out to you, or you may find them through advertisements or online, enticing you with promises of low rates. What's an ISO? ISOs are independent sales organizations that offer card processing software and hardware. ISOs often sell businesses on low teaser rates and customized bundles of hardware and software. But their credit card processing fees almost never end up being your actual rate because they have fees for pretty much everything. Like all of these. They generally lock you into a contract for 3 to 5 years, which you can only get out of by paying the full amount of the contract or a one-time penalty that's anywhere from a few hundred to a few $1,000s. And like the bank, there's no chargeback protection and PCI compliance is still on you. So high rates, questionable service, and big fees to break up with them. Which brings us to Square. You can sign up for Square online in a few minutes. There are no credit checks, PCI compliance is included, and there's no commitment to using it. You only pay when you accept a payment. Square charges one simple fee for every swipe, dip, or tap, and one simple fee for keyed-in transactions. Every kind of card, every time. Oh, and also, you get your money in your bank account in 1 to 2 business days. Or you can pay 1% of the deposit amount to get it instantly. The hardware is affordable, the point-of-sale software is free, and they're designed to work together seamlessly. Square provides chargeback protection on eligible payment disputes for up to $250 a month. So you don't have to be out any money while disputes are settled. Square also has a dedicated team to help walk you through the disputes process, which ends up saving you lots of time. So that's it. Those are the 3 main paths to start accepting credit cards. There used to be just the 2, until Square decided to make everything a whole lot simpler.